digging deeper into the commercial aspect of the business. 2-3 years from now, you will have roughly about 300 crores of rental income from the projects, and that this is after taking out the share of Max New York Life of New York Life. Sorry. So what I wanted to understand from you was that how do you how do you want your viewers to value this business, or what kind of valuations do these kind of rental streams attract? That's number one. And number two, how do you think about recycling the capital? Because once the project is stable and it has all the tenants in and it's earning regular rentals, would you think about rotating out of that and redeploying the capital somewhere else?
A great question, Ashwini. So to answer your first question, the valuation of commercial assets has now become more transparent, has now become more public and more open, if I can call it that. And the REITs in the country have, and also globally, have played a very strong role in being able to do that. We already have a few REITs that are publicly traded in India, and there are a few more in the pipeline. And therefore, there is a clear valuation benchmark at which those REITs are currently trading at. It is at a certain cap rate, and obviously the cap rates do move with what is the growth expectation in the portfolio and what are the interest rates, in the environment in that sense. So the REITs provide a fair benchmark, while they may vary slightly between different REIT and that's REIT to REIT. But for us at Max Estates, we're very confident that a valuation benchmark at a certain cap rate that you can see as a benchmark which already exists in the REITs is a fair assessment to look at a capitalized value of the rental income that we have. To answer your second question, which is about how do we think about capital, I think it's a great question, because one of the biggest challenges in the commercial space is the high intensity of capital that is required. And you don't see inflows till after you finish the project and start leasing. And therefore, the strategy, if you see that we've taken a partner, which is New York Life, in our office space. Second, what we look to do is that the minute we complete the project and we are able to lease it out, we do what is called the lease rental discounting. So while in our balance sheet, and I can share some more details there, it will show as debt, but that debt is effectively discounted lease rentals. So it's a little bit more conservative in that sense, and it's obviously lower cost as well. So it's discounted lease rental. So that lease rental discounting enables us to recycle the capital for the next projects as well.
Thanks. And now just shifting gears and getting into your residential space, you've announced two projects, one in Noida and another one in Gurgaon. And if I look at these two projects, maybe I think 18 months from now, please correct me if I'm wrong, you should start to see the project launches and the sales starting to come through. Again, your live well philosophy will be at work here. You've had an experience of delivering properties in Dehradun. And the question I wanted to ask you is that what will be your positioning, and what kind of profit margins can one expect in this business?
Yeah, no. Absolutely. So we have two projects, as you correctly mentioned. One is in Noida, which is 1 million square feet, and this is an outright acquisition that we did. And the second is in Gurgaon, which is 2.5 million square feet that we've acquired through a joint development route. And we are anticipating to launch our Noida project in the first half of the calendar year this year, and Gurgaon in the first half of the calendar year next year. And therefore, what we are looking at in terms of our positioning is for this to be a very so if you look at luxury, premium, affordable as three segments, we are wanting to position ourselves between the premium and luxury segment. So very upper premium, as very close to luxury in that sense. And the idea is that we want to be able to provide an ecosystem that enables the residents to live well. To do that, we know that there's going to be a certain cost to it, and therefore the positioning and price points are in that range. If I were to say what that translates to, it's in the range of 15,000 to 20,000 rupees a square foot. I know sitting in Mumbai that doesn't qualify as upper premium. That will probably be affordable in Mumbai, but in the NCR, that is the upper end of premium. And we believe that at that segment, that we can provide great value for money by providing an ecosystem and an environment that is more luxury in nature. But the price points at upper premium price point. The ticket size is also not exorbitant, and therefore we are keeping an eye on velocity as well. And therefore, keeping this price point, we are hopeful and confident that at least 25% should be a realistic margin on the residential business moving forward.